Did you know that according to star investor Cathie Wood, Tesla stock will eventually be too expensive for most retail investors? Big firms like Wood's ARK Invest have been buying Tesla shares during the dip. You definitely would want to heed Wood's advice, so don't miss this one. Tesla stock is currently sitting at $191.30 per share. This price tag for the leading EV company allows more retail investors to invest. However, experts believe, including Cathie Wood, that Tesla stock will soar well into the future. ARK Invest is an American investment management firm that manages several actively managed exchange-traded funds. ARK Invest focuses solely on disruptive innovation and offers investment solutions to investors seeking long-term growth in the public markets. The company also invests in innovations like self-driving cars and genomics, which explains why they are keeping an eye on Tesla. As of February 2021, the company had $50 billion in assets under management. ARK Invest CEO and CIO Cathie Wood is an American investor, a star stock picker according to Forbes, who is often called the most underrated investor in the game, since she is incredibly persuasive in her investment arguments, but she's also got the proven results to back up her surprisingly discerning claims. In October alone, ARK Invest bought Tesla shares twice, once in early October after Tesla announced Q3 production and delivery numbers, and once again around mid-October after Tesla's Q3 earnings call. In early October, Wood purchased 132,000 Tesla shares after Tesla reported a miss in deliveries, when Tesla announced its delivery and production numbers through a press release. For the second time in October, Wood bought another 66,190 Tesla shares after the stock fell following Tesla's Q3 report. It appears that Wood and her firm ARK Invest are on a buying spree when the stock experiences a dip. This is probably because Wood believes that Tesla stock will soar sky high in the next few years, so she is taking the chance to buy more stocks while it is cheap. In ARK's 2021 open-source Tesla model, the firm outlined its expected value of $3,000 per share in 2025. However, they have since updated this due to material changes, including autonomous ride-hail assumptions and inputs, capital efficiency estimates, and the forecast has been pushed forward by 1 year to 2026. According to ARK, Tesla's prospective robotaxi business line is a key driver by contributing 60% of expected value and more than half of expected EBITDA, or earnings before interest, taxes, depreciation, and amortization in 2026. Across the simulation set, they expect electric vehicles to constitute 57% of the company's revenue in 2026, although at substantially lower margins than the robotaxi revenue. Because of ARK's increased conviction in Tesla's ability to achieve full self-driving, they have to be updated with how the robotaxi business feeds into the model. Although in the past, they predicted that Tesla will never be able to launch autonomous ride-hailing, recent positive innovations from Tesla made them change their mind and assume its launch in 2026, 4 years later than Musk expected. They also suggest that Tesla will commercialize autonomous ride-hail in 2024. However, in 9% of their model cases, Tesla does not commercialize robotaxis within the 5-year window. If and only if robotaxi commercializes within the forecast window, the modeled financial results for Tesla are susceptible to the year of launch. ARK Invest's updated model also increases Tesla's capital efficiency. Tesla's capital expenditure per incremental unit of capacity had improved from $84,000 in 2017, when the Model 3 was ramping up, to around $7,700. In last year's model, they estimated that Tesla would spend $6,000 to $8,000 per incremental unit of capacity in 2025. Given its much better than expected capital efficiency, it may be safe to assume that Tesla will spend $2,000 to $7,000 per incremental unit of capacity in 2026. ARK's price target for Tesla is $4,600 per share in 2026, with the updates in their recent model. The bear and bull cases suggest that Tesla could be worth roughly $2,900 and $5,800 per share in 2026. If this happens, Tesla stock will be impossible to buy for any average American and will only be affordable to institutional investors. Institutional investors do not use their own money, but rather they invest the money of others on their behalf. Retail investors, on the other hand, are investing for themselves, often in brokerage or retirement accounts. The ARK Invest team also pointed out that they expect Tesla's robotaxi to be a game changer for the company. By 2026, if Tesla successfully launches robotaxis, the expected value is the average of all 1 million simulations. Said simulations are highly sensitive to the year when Tesla finally launched robotaxis. In most of ARK's lowest price per share scenarios, Tesla launches a vertically integrated human-driven ride-hail service but does not launch a robotaxi network, while in other scenarios, Tesla does not launch either service. While the company has not committed publicly to launching human-driven ride-hail, ARK detailed previously the strategic and tactical advantages of doing so. Importantly, human-driven ride-hail could become a profitable recurring revenue stream before Tesla launches a fully autonomous service. For cases in which Tesla launches a human-driven ride-hail service and solves for fully autonomous driving, ARK assumes that its human-driven ride-hail cars will transition to the autonomous ride-hail network over time. If it is unable to launch a robotaxi service within 5 years, Tesla could still launch a human-driven ride-hail vehicle while trying to solve for full autonomy. On the other hand, in ARK's many higher price per share scenarios, Tesla launches a robotaxi network in the next 2 to 3 years. In a published article, ARK Invest stated that although tuned to our expectation for 2026, we believe our Tesla model is methodologically conservative. We assume that Tesla's stock will trade like a mature company rather than a high-growth one in 2026. Wood has always been known as a Tesla bull. Investment companies, including ARK Invest, carefully consider the company's stocks or bonds before investing in them. The economy and stock market are put into consideration as well. Tesla stock is one that analysts and investors keep their eye on. Although Tesla stocks have constantly been fluctuating, like Wood, investors are still clamoring to buy Tesla stock since they are optimistic about the company's future potential. Many believe that Tesla is bound to do great things in the future. In light of that, numerous investors see massive potential in Tesla, especially since the company was the first to successfully introduce electric vehicles in the market. ARK Invest believes Tesla will continue to lead the electric vehicle market, especially if Tesla is the first to be successful in autonomous driving in the United States. Cathie Wood said, "We're beginning to believe that not only will Tesla take the biggest share of the electric vehicle market, we also believe that it could take 20 to 25% share of the total auto market in 5 years. That's by 2026. Tesla's manufacturing process is also said to be the envy of its largest competitors, including Volkswagen Group, which says Tesla is the benchmark in that department. A more efficient production process means lower cost and more profit, and Tesla currently maintains the highest automotive gross profit margin of any other car maker. It came in at 27.9% in the recent third quarter of 2022. Moreover, Tesla is also a leader in self-driving software technology, and by some estimates, that market could be worth over $2.1 trillion by 2030. With the company's fully autonomous robotaxi slated for release in 2024, it will potentially reclaim the pole position on that opportunity. This is a technology that other car manufacturers could take far longer to crack because it requires years' worth of real-world data. Then there are Tesla's other businesses, like residential solar panel generation and storage, the demand for which is so high that the company is struggling to keep up. And at this year's Tesla's AI Day, the company revealed a new humanoid robot called Optimus that could change the workforce forever. There's also the robotaxi business, which may well possibly change mobility forever. The expectation is that Tesla's model won't require any human intervention whatsoever, so it could revolutionize the way we move around and upend the logistics business. Wall Street analysts are predicting Tesla will generate about $120 billion in sales during 2023, and experts believe that the EV company will likely be producing vehicles at a run rate of 2 million per year. So, if that production figure rises tenfold, Tesla's annual revenue could exceed $1 trillion by 2030, assuming vehicle prices remain consistent with today's levels. If this happens, Tesla stock will inevitably soar high enough that most retail investors will no longer be able to afford to buy a share of the leading EV company. Tesla stock is one of the top ARK Invest stocks, with a whopping 10.8% weighting in the ARK ETF portfolio as of late October 2022. Make sure to subscribe to this channel for more Tesla stock updates after this.